Good evening. Tonight, we're diving into a story that's shaking up not just Wall Street, but kitchen tables and group chats across America. Let's talk about cryptocurrency, the internet money that's baffled Thanksgiving tables, sparked heated debates between generations, and made overnight millionaires out of people who once just dabbled on their phones. It's a topic that's gone from niche tech forums to the center of family feuds and financial dreams. For years, crypto was the Wild West of finance, chaotic, unregulated, and unpredictable. It was a place where fortunes were made and lost in the blink of an eye, and where the rules seemed to change every day. Regulators watched from the sidelines, unsure whether to step in or let the experiment play out. Enter Donald J. Trump, who's embraced crypto with the same gusto as his signature red ties and larger-than-life rallies. Never one to shy away from controversy, Trump has thrown his considerable weight behind the digital currency revolution. Since returning to the White House, Trump hasn't just endorsed crypto, he's made it a centerpiece of his administration. Executive orders, press conferences, and policy memos now revolve around blockchain technology and digital assets, signaling a seismic shift in how the government views this once marginal market. The government has shifted from wary observer to active promoter, shaking the very foundations of the crypto world. Lawmakers and regulators are now scrambling to keep up, drafting new rules and forging alliances with industry leaders. The message is clear: crypto is no longer a fringe experiment. It's a national priority. For holders, this is no longer background noise, it's the main event. Investors who once felt like outsiders now find themselves at the center of a financial revolution, with the eyes of the world and the government firmly fixed on their every move. Trump's pro-crypto stance has sent prices soaring and brought long-sought legitimacy. Suddenly, what was once dismissed as a fad is now headline news, and the market is riding a wave of optimism and speculation. But tying a decentralized ecosystem to such a volatile political figure is a monumental gamble. The stakes have never been higher, and the risks are as unpredictable as the man himself. Every decision, every tweet, could tip the scales in ways no one can fully predict. Now, every White House announcement or late-night tweet can send the market into a frenzy. Investors and analysts are glued to their screens, waiting for the next policy shift or offhand comment that could spark a rally or a crash. Fasten your seatbelts. Crypto is now strapped to the back of a political drama, and the ride is just getting started. Whether you're a skeptic or a believer, one thing's for sure: the world of digital currency will never be the same. How did Trump go from crypto skeptic to its biggest hype man? The transformation was as sudden as it was dramatic. Just a few years ago, Trump was calling Bitcoin a scam and warning about fake money, but by 2025, he was front and center, waving the crypto flag higher than anyone could have predicted. The pivot wasn't just fast, it was headline-grabbing, and it sent shockwaves through both political and financial circles. In January 2025, the Trump coin launched, less about tech, more about branding. It was a spectacle. Red hats, gold coins, and MAGA everywhere. The coin wasn't just a digital asset, it was a statement, a rallying cry for Trump's base, and a new way to show loyalty. Melania Coin followed naturally with its own glitzy rollout, and a promise of classy rewards for holders. Suddenly, owning a piece of the Trump brand meant more than a hat or a flag. It meant a stake in the new digital economy. The Trump family kept 80% of the initial Trump coin supply, netting hundreds of millions almost overnight. Critics called it a cash grab, but supporters saw it as smart business. The family's wealth soared, and their influence in the crypto world was cemented. The coins became status symbols, and the Trump name was now synonymous with digital gold. But this was just the beginning. The coin launches were only the opening act in a much bigger show. Trump's administration was about to take crypto mainstream, and the world was watching. The administration moved quickly, pushing to integrate crypto into the heart of the American financial system. Meetings with tech leaders became routine, and Wall Street started paying close attention. Suddenly, crypto wasn't just for internet forums and tech bros, it was a matter of national policy. In July, Trump signed the Genius Act, the first major federal law for digital assets. It provided a clear framework for stablecoins, aiming to make the US the safest and most innovative place for crypto. The law was hailed as a game changer, and it set off a wave of investment and excitement across the industry. Trump filled key regulatory posts with crypto enthusiasts, slashing red tape and pushing America to lead the digital currency race. The SEC, once a crypto skeptic, now had a pro-innovation mandate. Regulators who once blocked crypto projects were replaced by true believers, and the message was clear. America was open for crypto business. Congress, especially Republicans, backed this vision with gusto. Lawmakers competed to sponsor pro-crypto bills, and bipartisan support grew as jobs and investment poured in. The goal was simple: make the US the global crypto hub, outpacing rivals in Europe and Asia. For the crypto world, this was music to their ears. Regulatory clarity, presidential cheerleading, and a sense that the future was finally here. Crypto prices soared, and a new wave of innovation swept the country. Trump even hosted a lavish gala for top Trump coin holders at the White House, blending state power with crypto culture in a way no one had seen before. Invitations were coveted, and the event became the hottest ticket in both political and crypto circles. In this new era, holding the right meme coin could get you a seat at the table with the president. The lines between politics, celebrity, and digital money had blurred, and America was leading the charge into a bold blockchain-powered future. Just as crypto became the teacher's pet, the government stopped governing. We're now in a government shutdown, 21 days and counting. The SEC and CFTC are mostly furloughed. With watchdogs gone, the crypto market is a casino with no security. No one's monitoring for fraud or manipulation. If a crisis erupts, there's no one to call. The Trump administration spent months pushing for crypto oversight, but now, at a moment of high volatility, that oversight is gone. Investors are flying blind, exposed to hacks, collapses, and manipulation. The shutdown has created a perfect storm, a hyped market with no referees. It's a high-stakes experiment, and the early results are not encouraging. Then came October 10th. The shutdown was dry kindling. A presidential threat was the match. Trump announced 100% tariffs on Chinese imports and new export controls on critical software. The market panicked. Investors stampeded for the exits. Billions were wiped out in hours. Bitcoin fell nearly 15%. Ethereum over 21%. Meme coins fared even worse. Dogecoin plunged 50%. And Trump coin crashed 63%. Even the president's own coin wasn't immune. The crash was a brutal reality check. Crypto is still at the mercy of geopolitics and presidential whims. Fortunes built during the Trump-fueled bull run vanished in an afternoon. The lesson: in the age of Trump, political risk is now the biggest risk of all. Presidential cheerleading can send prices soaring or crashing. Let's break down the meltdown. The events that led to this financial disaster didn't happen overnight. They were a perfect storm of policy missteps, regulatory paralysis, and market psychology. Understanding the sequence is key to seeing how quickly confidence can unravel. It all started when Trump's aggressive tariff and export control threats against China sent shockwaves through global markets. Investors worldwide panicked, fearing a full-blown trade war. Crypto, always the riskiest asset class, was the first to be dumped as traders scrambled for safety. The uncertainty spread like wildfire, with every tweet and headline fueling the sell-off. But it wasn't just tariffs. The administration's vague language about restricting critical software spooked a market built on open-source code and global collaboration. Tech professionals and investors alike were left guessing which projects might be targeted next, adding another layer of fear and confusion. Meanwhile, with the SEC and CFTC shut down due to a government shutdown, there was no safety net, no one to calm nerves, no one to monitor for foul play, and no one to enforce the rules. The usual guardians of the market were missing in action at the worst possible moment. The lack of regulation and oversight amplified the panic, turning what could have been a routine sell-off into a full-blown crash. With no one to step in, fear took over and prices spiraled downward. In the midst of this chaos, a single wallet made $150 million by shorting Bitcoin and Ether right before the crash. Classic signs of insider trading. With no regulators watching, bad actors had free rein to exploit the turmoil for massive profit. With regulators furloughed, there's no investigation, no accountability, and no consequences for those who took advantage of the chaos. The fox isn't just in the henhouse. He's cashing out, walking away with the spoils while everyone else is left picking up the pieces. With the market left to its own devices, the results were disastrous. The carnage was total, and the lesson was clear. When oversight disappears, chaos takes its place. We can't ignore the gold-plated elephant, the Trump family's crypto empire. Since January, they've earned hundreds of millions from meme coins and more sophisticated ventures. Their company, WLFI, launched a stablecoin, USD1, moving from memes to financial infrastructure. Trump Media now holds $2 billion in Bitcoin and related assets, directly impacted by the president's policies. It's a feedback loop. Trump promotes crypto, his holdings rise, and he has more incentive to promote. The White House claims there's no conflict of interest, citing a trust, but when the president's words move markets, that's hard to believe. Where does the presidency end and the family business begin? Critics say this is more than a conflict of interest, it's outright self-enrichment. Democrats point to the Genius Act, passed just after Trump's company launched its stablecoin, as evidence of laws tailored for personal gain. The Trump coin launch, with 80% held by the family, is seen as a calculated wealth transfer from supporters. Every pro-crypto move is scrutinized. Is it for the country or the Trump family's wallet? The White House denies all allegations, insisting policies are for American innovation. But the scale and timing of the family's crypto earnings, plus the shutdown stalling investigations, fuel suspicions. For many, the line between public service and private profit has never been blurrier. Why should crypto holders care? The game has changed. Your investment is now tied to the president's whims, not just tech or market sentiment. Every policy, appointment, or shutdown can swing your portfolio. The president's family holding billions in Bitcoin complicates motivations. Are they promoting crypto for the tech or for profit? With regulators sidelined, the market is vulnerable to manipulation and insider trading. The promise of a level playing field is threatened. The game may be rigged. A single tweet can now wipe out your gains. Political analysis is now part of your investment strategy. Are you comfortable with your financial future tied to one unpredictable figure? The rules have changed. Ignore them at your peril. So, what now? Stay informed and vigilant. Watch the government shutdown. Regulators returning is key to restoring order. Pay attention to new legislation. It could reshape the market or favor political insiders. Treat the president's social media as a market indicator. His words move prices. Monitor Trump family crypto ventures. New launches or deals could shake the market. Do your due diligence. Check for political connections behind coins. Manage your risk. Diversify. Don't overextend, and prepare for wild swings. The dream of decentralized finance is now entangled with centralized power. Navigating this era requires caution, skepticism, and a steady hand. Good luck, you're going to need it.